Good evening, one and all. I am Kantimati. I am doing an internship in Taxpoint Consulting Private Limited. As a part of my internship, I have done a research on blockchain technology. My research topic is how blockchain will shape the future of accounting. In this seminar, we are going to learn about what exactly is blockchain, how blockchain and accounting work together, blockchain implications on accounting, features of blockchain, what are the problems does blockchain technology aim to solve, adoption of blockchain technology, advantages and limitations of blockchain, how will blockchain affect accountancy, various possible applications of blockchain in accountancy, breaking down blockchain in accounting 2020 and beyond. So what exactly is blockchain? Blockchain may seem like an amorphous and difficult to understand concept, but it is also an opportunity for CPAs and accounting professionals to embrace this disruptive technology. It is also known as a distributed ledger technology. Blockchain technology was created by an unknown person or a group of people to help manage and track the activities of the Bitcoin network. The first cryptocurrency, Bitcoin, was created in conjunction with blockchain technology, the place to manage the decentralized ledger system behind the currency. This technology records all the transactions that occur within the network and uses distributed ledger technology to broadcast all updates to each member of the blockchain in real time. It is a decentralized digital ledger that keeps a record of all the transactions that take place across a peer-to-peer network. Users who must possess highly secure keys to access it can post transactions or blocks in the database. Each block is time-stamped, and once validated, entries cannot be deleted or altered. In practice, there are many different types of blockchains being developed and tested. Blockchains can be either private, shared with only certain participants, or public, shared publicly with anyone who has access to the internet. Companies all over the board are incorporating it into their business processes. Blockchain technology has spread beyond its cryptocurrency roots and is touching a myriad of industries including supply chain management, healthcare, insurance, government, banking, and real estate. The accounting and the audit profession is no exception. While still a young technology, blockchain and its various applications are demonstrating the potential to significantly impact the profession. How blockchain and accounting work together. It's a technology trend that is gaining more and more momentum in the accounting sphere. That is, accountants who wish to remain relevant in the accounting field can't afford to overlook or ignore it any longer. Blockchain is a digital ledger of economic transactions. It is completely transparent and it is also impossible to hack. It is defined as an open, distributed ledger. Blockchain technology works by establishing a continuous records of blocks containing a timestamp, resistant to modification, or retroactive alteration, record and verify transactions without any trusted central authority. Blockchain makes things better, but it still requires some work. Accounting isn't forgotten about. In fact, blockchain is the perfect technology for accounting and finance. There is no other technology on earth that aligns better with accounting principles than blockchain. Because of the untamperable nature of the technology, it brings exactly that to the accounting equation, what it needs the most, verification and reliability. Key facts about blockchain in finance. Blockchain has the potential to secure financial transactions with the use of advanced cryptography. It enhances financial compliance and transparency by creating a decentralized ledger for small businesses. Blockchain is gaining traction among business leaders as more proof of concepts have emerged that can be applied in finance for small businesses. All records in blockchain. Blockchain has a serious implications on accounting. All records in blockchain are updated and accessible to everyone in real time. It has serious implications for accounting because it allows for smart contracts, consolidated bookkeeping, standardization in auditing, security and trust, less paperwork for accounting. Blockchain is a way of maintaining and proving the integrity of the digital accounting reports. The process involves the writing of hash strings on the original accounting books. This hash string represents the time-stamped fingerprints of the books. Blockchain verifies the fingerprints at any point of time with the original book and the auditor's copy. If these fingerprints match, blockchain is able to verify that the books are unaltered and true. In BLT, on the other hand, records are entered to and stored in a distributed or shared ledger, which is generally made accessible to all concerned parties. In this case, the accountant, regulators, auditors, and clients would each possess an identical copy of the ledger at all times. Of course, each client would have access only to the portion of the ledger that contains their own records. Public and private keys are used to authenticate users. Further, each record entered into the blockchain is encrypted, and each entry is automatically dated and timestamped. A collection of such records from a block is the name blockchain. A unique hash string representing the content of all records is updated with each new record. The updated hash is stored in the new data block. The hash forms a unique digital signature that can be used to verify that no records have been changed once they were entered. Blockchain provides a method for reconciling accounts and recording cash flow. It also records transactions and stores assets. To meet regulatory requirements, the accounting industry has relied on paper trails to perform transactions and accounting functions. Accountants have started to use cloud-based technology as well, but paper trails still dominate the world of accounting. When reviewing the books, auditors need to see these paper trails, and cooking the books is an age-old problem. So it may be time for a new solution. Blockchain technology is essentially a modern take on the traditional accounting ledger, where groups of records are bundled and put it into blocks. These record blocks cannot be modified. If someone attempts to modify or falsely post data in the chain, each connected block in the chain will be affected, creating an alert that data has been tampered with. To get more technical in an accounting scenario, the blockchain employs various protocols that require random private and public keys to authenticate transactions and allow for any transactions to take place on the network. The holders of these keys can remain anonymous. However, every transaction is still recorded on the shared ledger or chain. Just as you would see every transaction on your general ledger, money coming in and coming, going out. Features. Near real-time settlement. Blockchain enables the near real-time settlement of transactions, thus reducing risk of non-payment by one party to the transaction. The peer-to-peer distributed network contains a public history of transactions. Blockchain is distributed, highly available, and retains a secure record of proof that the transaction occurred. Ledgers are immutable. Blockchain contains a verifiable record of every single transaction ever made on that blockchain. This prevents double spending of the item backed by the blockchain. The economic rules built into a blockchain model provide monetary incentives for the independent participants to continue validating new blocks. This means a blockchain continues to grow without an owner. It is also costly to censor. A simple application in accounting could be the automatic payout of vacation earnings upon termination of an employee on a client's payroll. Because blockchain provides a transparent and immutable record of all accountancy-based data, it offers an opportunity for accounting professionals to streamline financial reporting and paves the way for continuous audit process. While the technology may disrupt the profession, sources agree that it will not eliminate the role of the accounting and audit professional. On the contrary, it represents an opportunity to evolve the profession. What problems does blockchain technology aim to solve? Reduced risk of non-payments. It is done by having an almost real-time transaction settlement. Decentralizing transaction process is by allowing the distribution of the entire history of transactions along the peer-to-peer network. Participants are incentivized to take part in validation of new blocks by the rules that govern the blockchain model they are involved in maintaining. The chain can continue with momentum without any single source, but it is difficult to censor because of this, by the way. There is no double spending along the line for items or edits to the ledger. Once an event is verified, transactions cannot be reversed. Adoption of blockchain technology. The American Institute of CPAs and the Wall Street Blockchain Alliance, a non-profit association promoting the adoption of blockchain technology across global markets, announced in 2017 a joint effort to advance blockchain technology to the accounting profession. Forbes and Cost research show that 31% of Small business owners say they are currently unsure which technology is the best fit for them. According to a Babson report, 18% of small businesses find it difficult to integrate new technology with their current technology setup. In the future, as blockchain develops, business owners could still face difficulty successfully introducing the new technology. Transactions happen faster because they don't have to go through this third-party middleman and that they occur at a lower cost. Blockchain has the capability to make small micropayments a reality and support small contracts to use multiple assets as transactions. Since blockchain removes the middleman, it may change the ordering cost of a product or a business. Advantages of blockchain. It facilitates collaboration by encouraging communication with the IT department for seamless integration of the new technology. IT colleagues may also be able to share best practices and training. That's the job requirements. Blockchain expertise is hard to find but can be developed. When hiring for roles requiring this knowledge, consider focusing on candidates who will have a short learning curve and can be trained on it. Accelerate the hiring process. If we have a candidate we want to hire, move fast. Also, enlist the help of a specialized recruiting firm that has access to candidates you may not be able to find on your own and can assist with your hiring efforts. Blockchain can be leveraged to improve traditional accountancy and fight accounting fraud. Auditors can automate most auditing functions through the power of smart contracts. Auditing can be fast and easy thanks to the inherent traceability of everything that is recorded on the blockchain. Since everything is automated, blockchain can reduce the time an auditor needs to spend checking the books. Blockchain offers firms and accountants an opportunity to streamline their audits and processes since it provides a transparent and immutable record of all data. It helps ensure that the data is truthful and accurate. It improves regulatory compliance. Agencies must go through a lot to satisfy regulatory demands. Blockchain can help take the burden off from the and provide the enhanced security. Blockchain may even become mandatory in some financial services as more regulatory authorities embrace the tech. The end of the month chores may become less of a burden. Accountants can start using smart contracts to automate reconciliation tasks. By utilizing smart contracts, accountants can automate many of the tasks associated with the reconciliation, making this end of month chore less of a burden. Data entry is perhaps the area where blockchain can help the most. It's where chances of human error are highest. Blockchain can significantly reduce human error by making most accounting functions automatic. The greatest opportunity for error using blockchain is on data entry. Once data is in the chain, smart contracts will make many accounting functions automatic, reducing human error. Improved efficiency. Blockchain can be designed to be much more efficient than legacy accounting software. It is more challenging to get data into and out of accounting software. Blockchain is a much faster and more robust database. Well-designed blockchains are fast and powerful databases. Getting data into and out of the system can be done more efficiently than interacting with legacy accounting software applications. The immutability of blockchains make it extremely difficult to perpetrate fraud using such a platform. In order to modify a record, the same change would have to be made on all the copies of the distributed ledger at the same time, which is highly infeasible. One aspect of the DLT that accountants should be excited about is the ability to reduce audits. Through the power of smart contracts, many auditing functions can be automated, reducing the time an auditor need to spend looking at records. Agreements between buyers and sellers would now be inscribed in computer coding language before being decentralized and distributed across a blockchain network. Smart contracts help small business finance managers create, monitor, and comply with financial agreements made with vendors and clients. These can be created for any financial transactions that boost cash flow. As all data is stored on one accessible system, blockchain ensures transparency between the vendor and supplier. This helps to eliminate any errors or disputes with each transaction because it allows small business accountants to retrace erroneous data entries as an incorrect entry to a block. When imputed on a double entry system, these errors can be difficult to identify and may mean end of the year financial reports are inaccurate. Blockchain will help ensure that financial reports are more accurate and secure, as it will use cryptography and timestamps on its transactions. Blockchain accounting applications can also make it easier for accountants to file tax returns. With the work of authenticating transactions done for you, we can focus on finding inaccuracies or discrepancies in our clients' transactions and ensuring that their tax information is correct. Blockchain's ability to offer a provision of an unalterable record of accountancy-based data provides a chance to rid the financial world of embezzlement fraud. It eliminates the conflicts of interest. In the usual case, the interest of the auditor can depend on the fact that they are hired by the manager or any other party. Blockchain offers an independent, automated, and standardized way of auditing to mitigate the chances of any favor or interest. Manual auditing has a number of issues to deal with, such as redundancy and other accounting complexities. By integrating blockchain technology as per the internal mechanism of the business, it will pace up the operations. The need for manual auditing is greatly reduced. A significant amount of cost cutting can be introduced in your accounting. Limitations of blockchain. Blockchain technology can help reduce the cost of the maintenance and reconciliation of various ledger. Since it provides certainly over the ownership and history of any assets, it could eventually bypass the need to keep records as accountants do today. Major challenges are for auditors, it will be important to understand how transactions are recorded in a blockchain and to keep in mind that recording a transaction in a blockchain may or may not provide sufficient audit evidence related to the nature of the transaction. In order to use blockchain as a credible data source, there must be an audit of the process itself to ensure system confidence and the integrity of the data. A big feature of the blockchain is that the ledgers are immutable. They can't be changed. But what's really important for auditors to keep in mind is the integrity of the data. The fact that it doesn't change doesn't mean that it is accurate or authentic. So all of the testing and controls that took place before need to still take place without being lulled into a sense that this immutable ledger is necessarily correct. Modifying a record on a blockchain is highly infeasible, as the actor would have to make the small the same change on all the copies of the distributed ledger simultaneously. While it is more than likely it will not solve every single problem we have, it will fundamentally change the game because traditional accounting practices address data, security, and privacy as a separate important procedure. Blockchain technology can provide a sort of patch for existing accounting softwares with weaker approaches to security and privacy. A debtor's position could be all but guaranteed due to blockchain technology, which would serve as the middleman in place of a lawyer or other authorized professional to verify data. However, the recoverable value of the asset and its economic worth still needs to be ascertained. Similarly, the ownership of assets will be easily verifiable within the blockchain box, but its true worth, condition, and location would still need to be assured. A transaction recorded in a blockchain may still be unauthorized, fraudulent, illegal, executed between related parties, linked to a side agreement that is off-chain or incorrectly classified in the financial statement. The accounting profession is going to change when the technology is adopted. The focus is really around assertions like validation or valuation. Blockchain may or may not provide sufficient audit evidence related to the nature of the transactions. How will blockchain affect accountancy? Impact of smart contracts. Smart contracts is a computer protocol that runs on top of a blockchain. It sets rules for contracts and enforces agreements once the rules are met. A smart contract holds funds and automatically releases them once contract conditions are fully met. They will completely change how accounting works by replacing normal financial transactions and doing away with third-party intermediaries such as lawyers. Death of the audit, because all entries in a blockchain are distributed and cryptographically sealed, it is virtually impossible to destroy or manipulate information, preventing people from being able to cook books or conduct other forms of financial fraud. Blockchain records are often referred as immutable, that is, unable to be changed. In such a system, there seems little need for an auditor. After all, if transactions are recorded in an immutable chain of digital blocks with no apparent way of being altered, it creates a perfect audit trail. So, dispensing with audits and auditors. However, auditors need not worry too much, they will still have a role to play as long as humans are involved and bring their inherent risk of making mistakes in conducting fraud. Third party is needed to provide assurance over the validity of transactions. However, the auditor of the future will be a different beast. They will be more closely concerned with validating systems of governance and controls, validating the security and integrity of data within systems, and being capable of determining whether platforms or applications are operating as intended. The age of triple entry accounting, the end of the bookkeeper, as mentioned, triple entry accounting will do away with double entry. Double entry bookkeeping means every entry to an account requires a corresponding and opposite entry to a different account. Triple entry adds a third layer or an entry. All transactions and involved parties are written on the blockchain. The information is shared with everyone involved. The bookkeeping role could totally disappear with blockchain in place. Possible applications of blockchain in accountancy. The Big Four as early adopters. Because of its potential uses, the Big Four firms have started investigating the possible applications of blockchain in accountancy. KPMG. To help financial companies explore the potential of blockchain, the firm launched the Digital Ledger Services Program back in 2016. They are also a member of the Wall Street Blockchain Alliance. Moreover, KPMG has teamed up with Microsoft to identify new blockchain applications. The firm has also partnered with Microsoft to create the Blockchain Nodes initiative with the stated goal of identifying new applications and use cases for blockchain technology. Ernst & Young. The firm launched the Blockchain Analyzer in April 2018 to help their auditors analyze and review blockchain applications. They were also the first to start accepting Bitcoin as the payment. In April 2018, EY launched Blockchain Analyzer that will facilitate EY audit teams review and analysis of transactions on the blockchain. This pilot will lay the foundation for automated audit tests of blockchain assets, liabilities, equity, and smart contracts. PwC. The firm is one of the most active professional services enterprise in the world of blockchain technology. Having started a dedicated program to train over 1,000 employees in the use of blockchain and cryptocurrency. It has also announced a blockchain validation and auditing solution for cryptocurrency. It started accepting Bitcoin as its Hong Kong office in December 2017. April 2018, the firm announced its first ever wide release blockchain auditing service with crypto business already signed up. The service audit company blockchain services, ensuring they are using the technology correctly and efficiently. Deloitte. Deloitte was one of the first big banks to get on board with blockchain. Last year, they have unveiled a mobile platform, Blockchain in a Box, to help business demo blockchain solutions. They have been playing the blockchain game all the way back from 2014 when they launched Rubix as a one-stop blockchain software platform. Since then, they have continued to diversify their offerings, exploring initial coin offerings. Their partnership with Waves platform is poised to make ICOs and the crypto trading more accessible than ever before. breaking down blockchain for accountants in 2020 and beyond. Blockchain technology is also one of the most exciting technologies of the 21st century. A universally decentralized ledger system that can share data among an infinite number of users. Blockchain is unhackable. Due to its ability to share data and simultaneously record real-time transactions on every single computer connected to its network, technology can't be interfered with. If anyone tries to hack or scam a blockchain, the entire chain takes notice, and the chain will be forked with where the hack happened, eliminating the culprit from the chain. This is an incredible breakthrough for data transfer and recording around the world, especially for industries like accounting, where pristine record keeping and data security are essential. Future implementation of blockchain technology in accounting. Due to the strict implementation built within blockchain technology, accounting documents will be less vulnerable to unintentional modification of their life cycle. This would help refine business process and possibly ease interdepartmental collaboration. At some point, business process may be able to span entire companies and be fully traceable. Another cool feature for accounting is that automatic payments for invoices may also be made through common through smart contracts. Contracts could be drawn up that would enable automatic payments after the verification and receipt of goods through a blockchain, which would help relieve the overhead involved, the burden of accounts payable, accounts receivable process. Accounting process can be more effective and streamlined. It saves banks from 30% on infrastructure costs. Blockchain has the potential to make disruptive technologies more effective, accounting process more effective and streamlined. As it can save banks 30% on infrastructure costs. By 2024, the estimated worth of the global blockchain technology market is $20 billion. Blockchain applications will be mainstream for small business finance within the next 5 to 10 years, putting together a timeline for the advancement of blockchain and how business should prepare themselves for the new technology. In the short term, which means 1 to 2 years, there is currently no viable use of blockchain applications. Businesses should begin to educate themselves on how it could impact finance in the future. Midterm, 2 to 5 years, emerging blockchain applications include contemporary currency and digital commodity exchanges. If it is affordable, small businesses should consider adopting software platforms with core accounting functions based on blockchain. Long term, 5 to 10 years. Adoption trends will significantly peak in this period. Industries such as banking and retail will be heavily investing in proof of concepts. Although the pace of blockchain's emergence has slowed, there is no doubt it promises to have an influence on the finance and accounting industries in the future. As it is not yet in regular use, small businesses should prepare themselves by becoming educated on the technology, the role it might play in the future of their business. Being prepared should make blockchain easier to implement. It becomes more of a mainstream business technology. Some accounting and auditing firms have already embraced blockchain technology, realizing that blockchain transactions are simpler, more visible, and more transparent than traditional transactions. Improvement in blockchain's operational efficiency mean that much of the work accountants do, such as collecting and inputting data, sampling, and proving provenance, can take place automatically. Blockchain accounting methods are in fact so revolutionary that some believe they might end double entries accounting 700 year in. The security and trust built into blockchain ledgers, the firm may even end up streamlining all services to stay competitive in a world of increasing data volume. Blockchain will enable transfer of value and digital assets similar to how the internet enabled the exchange of data and information. New business models that use blockchain as the underlying technology are emerging fast. In the last 30 years, internet technology has enabled easy information exchange through tools such as email and browsers. In addition, the industry of e-commerce, which includes many business models such as online video streaming, online advertising, etc., are entirely based on internet. The technology of blockchain will enable a new industry where digital transfer of value would be the new norm. There are currently public-private partnerships in the work across the states to explore the viability of technology in the areas of transferring titles. Industry adoption of blockchain is on the rise. because every industry, including non-profits and the government sector, is working on building proof of concepts on blockchain platforms. While some industries, such as financial services and supply chain, have taken the lead. The other industries, such as manufacturing, constructing, media, and aerospace, are catching up quickly. Accountants will need to understand how the information is tracked and how the value is transferred on blockchain. It is very likely that existing accounting and ERP products will start integrating blockchain technology. New business models are coming up with the blockchain technology. The points which needs to be incorporated blockchain with accounting are blockchain accounting potential, fraud reduction, ease in auditing, better regulatory compliance, reconciliation benefits, error evasion, better efficiency, cost benefit, effect of accountancy jobs. The bottom line would be that blockchain is not going to disappear anytime soon. It's going to change the accountant's operating system by making relevancy in accounting, efficient operations, re-evaluating business models, and assessing the need and benefits of implementing the blockchain solution. Blockchain has another super feature, that is open source distributed ledger. Many blockchain protocols exist in open source software, which is software whose source code is available publicly and open to improvement from anyone. With an open source accounting system, we can write our transactions directly into a joint ledger shared with other companies or organizations. This could actually simplify regulatory proceedings, public verification, and an interwoven register, all held together by an everlasting set of accounting records. For example, when I'm dealing with inventory, I may have a ledger obtained in the public domain, but there is still going to be a need for somebody to physically observe that the inventory exists. It's not destroyed. That is not going to be available in the blockchain record. We can see the focus of where the profession is going to go in the near future, where we obtain the source for plotting, support for assertions is also going to change. Uncovering and streamlining internal control mechanisms. For example, it is a crucial task where specific accounting skills and knowledge are needed. Also, the classification of transactions and tracing the origins of cash in and cash outflows need human brain cells with deep accountancy knowledge. Conclusion: this technology can have a profound impact on accounting and finance going forward. It is important we make sure that its adoption proceeds in a way that's the best interest of the public and our financial markets. Applications of blockchain will only continue to increase. It will change the way the accountants operates. Accounting won't become relevant, it will become more efficient. The same way computers and the internet have changed workplaces across all industries. Blockchain will provide solutions to industry-wide issues. Businesses are currently re-evaluating their business models and assessing the need to implement a blockchain solution. However, it is essential to keep in mind that problems should not be created to implement blockchain. On the contrary, a blockchain solution tackles pre-existing issues across a variety of sectors in different industries, proving to be extremely powerful in those cases. For sectors that have found a solution in other technologies, there may not be a need for the implementation of a DLT. The power of a blockchain combined with current accounting software has far-reaching implications for the whole industry. By redefining accounting, blockchain helps create a more streamlined, more robust industry that's less focused on the routine tasks of crunching numbers. Thank you. Thank you, Taxpoint Consulting, for giving me such a wonderful opportunity.